What's going on, you guys? Charles here from the Traders Corner. Today we're going to be starting a new video in the series where we basically talk about, if you know nothing about trading, we're talking about some different ideas or concepts or words that we think you might want to learn. That being said, I apologize for the audio quality of this video. I made this video while I was a bit tired first thing in the morning, so just hope you enjoy it, hope you find some value, but yeah, check this out.
What's going on, guys? My name is Charles and this is the Traders Corner, and today we're going to be starting the first video in a series where we talk about basically if you know nothing about trading, right? Now this is a series that we've been thinking about doing for a while, as you know, we're kind of just in our conversations with our friends who know that we have this channel, we make these videos. A common theme that comes up is, yeah man, I'd like to watch more of your videos, I just kind of don't really know what it is that you guys are talking about. And I think that's something that, is, especially if you're making content about something that you're very enthused about, it's very easy to do that, right? Because I think when we make content, we often make content kind of thinking that everybody completely understands what it is that we're saying, right? Whenever we mention something. And while, we're making content for other traders, the point of this channel is to kind of bring more people into the space and kind of demystify the space. So if we're not making content that resonates with both people, and kind of resonates with those people who maybe don't have that experience in the market themselves, then we're kind of failing in that aspect, right? So kind of to get started, we're going to have a very short take on this first one, because it's a very short topic, but it's an important topic, as it's a very common term that you hear in the space. And I think this is a very important part about demystifying the space, especially when it comes to finance, and that is the actual language around the space, right? So we're going to be looking at different words or different jargon that you might hear in the space throughout this series and kind of explain what it means when people are talking about it, right? So first and foremost, the first piece of jargon that we have, and I just gave it up, is called a security, right? And what does it mean when somebody says they're trading a security or they're talking about a financial security? Well, security is essentially just a vehicle or something that represents financial value, right? That's the only way I want you to think about it, in terms of all it does is it's something that represents financial value, whether it's something that is, it's often listed in what's called an exchange, right? But it can also be traded between two people, which is called more over-the-counter trading, right? Which, to give you a quick example, a contract for something can be seen as a security because it can be traded, right? So that contract can be traded on an exchange, or that contract could also be traded between two people. You could have a contract and sell that contract to somebody else. So that's a security, right? It's a vehicle that represents financial value. So that being said, the next thing that we might think about when we think about a security is it can represent either ownership, a payment, arrangement, or contract, like we were just talking about, right? Like a loan, or the right to ownership, either in the future or right now, right? So that is kind of the two main things that I want you to think about when it comes to what is a security, in terms of what is the overarching definition. You might see some more, I guess you would say, financially jargony definitions, in terms of, okay, well, it's this, and that, and it represents financial value, right? But just think about it in terms of it's something that represents financial value, and it represents either ownership, a payment arrangement, or some sort of arrangement, or right to ownership, right? Now, thinking about securities, what are they used for? Well, essentially they're used by companies or by people to represent again, like I said, an arrangement or a contract, or they can also be used by companies to raise money, right? So companies can send out what are called stocks and bonds, and using these stocks and bonds, they can raise money, right? So how do they use a stock, for example, to raise money? Well, a stock represents ownership in a company, and the company sells that stock to the market, to you and me, right? How would a bond help the company raise money, right? Well, a bond represents your right to something that the company, generally money, will give off, right? Or They can also represent your right to stock or ownership in the future, right? Which is a different type of security, which is called a hybrid. More on that later. But essentially, the bond represents your right to money from the company in the future, right? But up front, the company gets your money now, right? So that's how a company might use a security to raise money. And because these securities are used to raise money, and they often represent ownership or the right to some sort of payment from somebody or something, they can be and often are traded in what are called secondary markets, right? Now, lastly, we're going to talk about the main types of securities. So there are going to be stocks and bonds, which we already talked about. Then we have what are called hybrids, like we briefly mentioned before. So that's a mixture of a stock and a bond, exactly as it sounds. And then you also want to think about derivatives. Now, you can have a lot of different, I guess you'd say, types of securities under those umbrellas, but just kind of think about those four main umbrellas right now. And essentially what a derivative is it's essentially a security whose value is based on another asset or security, right? So generally that asset or security is called the underlying asset. So if you think about an option is the best example of a derivative contract. And if you think about an equity option, what is the underlying asset on an equity option? Well, the underlying asset is the stock of which that option is listed on it, right? So essentially the option's value is derived in a large part, not only by, but in a large part by the underlying asset's price, right? So that's the main look at what is basically a security and understanding the basics of securities. Now, again, like I said, there's going to be a lot more that you could delve into when it gets into securities and the types of securities out there, and trading them and how to trade them or invest in them. And we're going to talk about some of that in the future. But the point of this series of videos isn't really to go too deep in this knowledge. It's to give that breadth of knowledge and kind of open up the doors so you all can kind of take the knowledge yourself and go deeper with it however you see fit, right? Because maybe you don't care about every single type of security that we might talk about. Maybe you only care about options, right? And so I open your eyes up to options and kind of what it is that it means to go long or short, which is the next video in the series, so definitely check that out. But open your eyes up to what it means to go long and short, or using technical analysis and all this kind of stuff, and you decide how to kind of take that knowledge further and go deeper with that knowledge, right? So I hope you enjoyed this video, hope it provided some value to you, and please join us again next time.